Hello and a warm collisions YYC. Welcome to my guest this morning, Mr. Brian McLennan. How you doing, Brian?
I'm doing very well, Tyler. Thanks for having me.
Oh man, it's an absolute pleasure. The world conspires. Michael Godet, a friend of mine, someone I have a huge respect for, reached me out and goes, Tyler, I know a guy. You should chat with him. That's usually what it takes for me because we have such a great community here in Western Canada, and I've been able to meet so many cool people through exactly this mechanism. So you and I had a chance to meet. I'm really curious, as I often am, to learn more about what you're about. So I will make no pretense to describe it when I've got the man himself on the line. You are CEO at Link. Brian, you know the joke. What's a link? Let us into the tent. Take us on a little elevator ride. Give us the story, and we'll launch off from there.
Yeah, thanks, Tyler. Thank you very much. I appreciate it. And I appreciate the introduction from Mike, a former podcast guest of yours and part of our team, a great person. So who am I and what is Link? Well, my name is Brian McLennan, as you said. I'm a co-founder and the CEO of the company. I've been here since before the beginning of the company. Link is effectively a technology platform that enables our partners to have a turnkey solution into the workplace savings space. So workplace savings plans, pension plans, group RRSPs as they're also known. So we are the infrastructure layer, if you will, the record keeping, the administration, and the technology platform that allows our partners, including banks, credit unions, asset managers, wealth managers, to have easy access to a very significant space and market. Now, there are a number of stakeholders that are participating in this space, all the way up from employees participating in plans and sponsors, employers that want to incentivize their employees and help them save for retirement, all the way up to our partners and, of course, our team. They're an important stakeholder in what we're doing as well.
I love it. You've already beat me to my first questions of like, okay, so let's imagine we're in a room. We've got a ball of yarn, and it's one of those spy films where we're trying to piece it all together. So you said your partners, and you led with that really, really key. When you've got the banks, the credit unions, where does the yarn start to go? You're that tech layer, the infrastructure layer.
Right.
Is that partner, is that bank, are they your biggest and greatest stakeholders? And then where does the employee fit in? Like, how do we draw this out on the wall?
Well, that's a great analogy and a great storytelling tool. I love it. The ball of yarn. To be honest, the most important stakeholders are the employees, the team. Without having a fantastic team, which we absolutely do at Link, you're not going to accomplish very much. So number one is the team. Make sure that you look after that stakeholder group, and good things will happen after that. But as far as partners go, they're a critical element in what we're doing and how we get our product to market for Link. The other stakeholders that you're kind of keen in on that I kind of alluded to earlier would be employers that are looking to provide a differentiated benefit to their employees. And they're looking to attract, reward, and retain top talent within their organization. And then, of course, another very, very important stakeholder, and one that really drives how we do what we do within our platform, are, of course, the employees, the workers that are participating in these plans. Ultimately, what we're trying to accomplish with that stakeholder group is afford them the ability to have a dignified retirement, be able to retire on their own terms. There's some interesting stats in this space, but ultimately, this is one of the best ways for people to save, and prepare themselves for, ultimately retirement and financial goals along the way.
I've heard it called, like, from most of the financial advisors, if your company's willing to do anything matching or that's free money, do it. Like, don't even question, just absolutely do it. And that message has stuck with me many, many times over the years. That
is absolutely solid advice that you got. Okay. There really is no other way when you have an employer matching your contributions into some sort of workplace savings plan. There's no other way to get 100% return consistently, right? Like, if you are contributing 5% of your salary every pay period to prepare yourself for retirement, and your employer is matching that 5%, that return is immediately 100%. And then,
there's not a lot of investments I have access to that I'm doubling before I even start the journey. Before I forget a compound, I'm doubling right out of the gate.
That's right. And so you certainly see, statistics will show in these types of plans when there is an employer match, the engagement is not nearly as high. When there is an employer match and when it's a significant employer match, engagement in these plans will eclipse 90%. So 90% of the eligible employees will actually be in the plan. So yeah, it's a fantastic
90%.
way.
Oh, wow. Okay. That's a significant level of, there's offering things and then there's uptake, right? And I think that's the gap that you often look at. Talk to me a little bit about, I have so many questions about trends and where you're focusing, but let's talk a little bit about, I've lived in Alberta for 20 plus years now, and I've known a lot of people that have been at mids and juniors over the years in the energy sector where the matching was employee stock or options.
That's right.
And it wasn't a bank or a credit union. It was more in the often publicly traded organizations. So they had that leverage. I've seen that really work out and I've seen it not work out at all. Talk to me a little bit about maybe, and is that a Alberta phenomenon?
Yeah, I would say that is the volume of matching, the percentage, the quantum of matching that you might see in these types of plans where energy companies are offering their employees stock is pretty significant. It is unique from what I have seen in Canada. And you're right, it can be a complete roller coaster. In the heyday of energy and oil prices are high, that portfolio is significant. However,
I met a few when I first moved here, some 25-year-old like multimillionaires that just happened to be at the right company at the right time. Sure, they worked their butts off, but they rode the ride.
Yeah, it's an amazing industry. My grandfather was in energy. My father was in energy as an engineer. I'm sure a lot of native Albertans in some way, shape or form have been connected to the energy industry. Yeah, it can be absolutely fantastic, but it's a cyclical industry. And there's times where oil prices are depressed and stock prices go down. And then the value of that, holding for the employee goes down significantly. So what you might find is you have folks that are preparing to retire, and then suddenly there's a down cycle and their portfolio is worth significantly less than what it was worth before. So at that point in time, it's a very challenging time to pull the chute and go into retirement when your portfolio is significantly lower. So what you have seen is you've seen boards of these energy companies and executives look to diversify sort of the mix of compensation. So outside of cash compensation and health benefits, you're seeing a bit of a diversification effort to see investments into, let's say, index tracking investment products. So you're protecting yourself potentially against the downside of some of these cyclical turns. And then, there's still a holding that allows you to participate in the upside.
Are you seeing, like, typically when you work with a partner, whether it's, a bank, credit union, and obviously the employer is going to have a big say of like what type of partner they want and how risky that portfolio is. Because again, less risk, maybe less upside, but I protect my principal and I don't lose. And it feels like that would be more of a conservative space where some of these portfolios will be assembled in a way to minimize the downside for employees. But whose call is that? Because the employee gets access to a broad basket of opportunities, or does the employer typically work with the provider, being the bank, credit union, or whoever it might be, to build a portfolio that they also think is what they want to provide for their employees? Like, is it complicated, or are there kind of more? Is there a straightforward pass, or is it pretty a la carte?
No, it's you typically see the plan sponsor offered a selection of investment products that they're able to review, and with the help of the provider, select an appropriate suite of products for their employees. So ultimately, that plan sponsor does have a significant amount of control. What you'd see with insurecos who own a significant chunk of this market is that process would happen. There's a suite of products that the employer, the sponsor, can choose from, and then ultimately, when a member onboards, they'll select with products that they think are appropriate for them.
Okay.
We flip that script a little bit in that we prescribe the portfolios. So same discussion with plan sponsors. There's a number of available portfolios. But what we do when we onboard members onto the Link platform is we'll put them through what we call a questionnaire and a KYC. So we need to
a bit of a discovery process. Also, from a financial perspective, that's required. Back to the KYC stuff.
That's right. We have a whole,
which stands for Know Your Customer.
I was just about to get there. Thank you for helping me.
Acronyms can be very dangerous.
Yes, indeed. No, that's exactly correct. And so, through that, and we have a wholly owned subsidiary within Link that is a discretionary portfolio manager. So that team put together that questionnaire. It's digital advice, or robo advice as it's sometimes known. And what that does is it ensures that every member that's participating in a plan has a suitable portfolio. And suitable means for them, it aligns with their investment objectives, the time horizon of that investment.
Am I 30 or am I 55? I'm going to have a different time horizon. Right. I'm going to want access to different products.
Right. And through that, we'll assess their appetite for risk and volatility, and then we'll prescribe a suitable portfolio. Part of the technology and the algorithms in that scoring also checks for consistency of answers. So we want to ensure that how they're answering the questionnaire is aligned with the objectives, and look for inconsistencies. And when we do spot those, we then have that employee have a conversation with someone on the portfolio management team to ensure that they're, again, in a suitable portfolio. So that's one thing that we do that is very unique. But yeah, just kind of going back to the original question, we ensure that there's appropriate investment products that are available to the sponsor, and then of course ultimately to the employees participating in the plan.
So ultimately, when I think about that layer that you create, I'm a big bank. I'm very good at putting things together and selling products. I'm an employer. I'm very good at running my business. I'm not necessarily good at doing this, but yet I want to provide this value to my employees. So that opportunity, I'm assuming you guys also saw from an entrepreneurial perspective, a gap in this area. Was the gap the service layer, or the service layer and the level of technology that you're providing? You know what I mean? Like sometimes something was happening, but it was phone calls and notepads, and now you've modernized that, or was it a combination of both?
I would say it's a combination of both, right? Like technology, or pardon me, the insure codes that dominate this space have been around in some cases for over a century. They've made acquisitions, they've acquired technology, they've integrated these technologies, and that proves to be extremely challenging at scale. But they continue to make significant investments in that technology stack. But what we see is an ability for us to really come to the market with a solution that offers the best of the best. And we do it differently, like the prescriptive digital advice to onboard employees, fully digital, execution of beneficiary designations, fully digital. So we make it a really easy experience and suitable experience at the same time, so that we see high engagement rates, so that the employer will realize
you took out the friction.
We took out the friction. Yeah. So, we see an opportunity to be nimble in this space to, you mentioned one thing in that previous comment, like the plan sponsor, the employer is, set on executing on their business plan and being successful. They're not there to be an administrator of a group RSP plan. So we want to ensure that
not a core competency of often.
No. And so we want to reduce any friction on that side as well. So make it easy for the administrators to, automatically have new employees added to the group plan. When employees are terminated, they're automatically taken out of the plan. Contributions stop. Managing the contributions as well through payroll providers. So, we really focus on building those integrations with payroll providers, HRIS systems, to provide ultimately a better experience for the administrator of these plans.
That totally makes sense to me. As a business owner, I'm already thinking about, this sounds like an easier way to do it, which we all want easy because all of our plates are on fire and overwhelming. When you think about trends that are impacting your business, and I almost want to park the technology side because I understand it. We're using technology to reduce friction. We're making it easier. We're taking things that might be, administratively intensive and streamlining them. But when you look at investment vehicles and what we have access to is, Bitcoin now becomes available and through different providers. And I almost want to park that. And thinking back to the need for employers to add value, to differentiate, to attract talent. How much does this play? And do you see a trend where this is playing more into that than ever before?
Yes. You touched on this a little bit earlier. Like how conservative are these portfolios, right? These are sponsored by the employer and provided as a benefit to the employee. So there is some conservative nature in the approach to these investments and the investment products in the platform. But at the same time, you're looking to take advantage of opportunities that are out there. So alternative assets, those types of things. Where does that mix fit into the portfolio mix? I think ultimately what you will see is you will typically see a more conservative approach just because of the relationship of this plan that's being provided as a benefit. But that doesn't necessarily mean that someone who's now investing in their group plan. They understand going through the experience and being able to capitalize on some of the education that we provide to these employees to go out on their own and make investments into perhaps more risky products through some sort of discount brokerage. But we want this plan through the group to obviously have great returns at the lowest possible fees with the best experience possible. But we want that to be a foundational type of investment. And these are the types of things that help them achieve their short-term financial goals and objectives, as well as prepare them for retirement.
Well, and you've got different cohorts. You've got a certain age cohort that might be a lot more comfortable with things. And I just floated in crypto just because it's, you can't not think about it these days as it's starting to permeate its way and become more accessible to the mass market. Good, bad, or indifferent. That's not what we're here to talk about. So it's irrelevant. But then you've got other individuals that are like, I want nothing to do with that. I've been, safe. And also I'm at a different stage in my life where I might need that money in 10 years versus like, I'm 30. This is a long-term. From an employer perspective, is this becoming table stakes for companies to stay competitive as well in terms of talent attraction? That's
a really interesting question, because you would think not. Like currently, more than half of working Canadians do not have access to a workplace savings plan, which is very interesting. So
back to the gap around dignified retirement, which we'll talk about that on a global perspective in a minute.
Right. So you're seeing a net new opportunity in this space, right? So currently, the top 10 reporters, look to have assets probably close to $350 billion, almost evenly split between group RSP and defined contribution pension plans. But with half of Canadians not participating in any type of plan like this, there's obviously a net new opportunity to significantly grow that asset base. So yeah, we're really focused on ensuring that we can provide value to the employer and to the employee.
You and I had our pre-chat, our pre-date before the real date, I always joke. And you shared with me a little bit about kind of even where Canada sits on the global stage and where other markets you looked. You talked about USA, you talked about Australia. Mm-hmm. When it comes to this challenge of like, let's go back to the North Star, the big like dignified retirement. I love that term so much on so many levels, because we all could, it needs no definition, but yet we all would define it our own way in our own mind, and as we should. Talk to me about where you see Canada sitting and just some of the other jurisdictions you look to for inspiration, leadership, understanding what to do right, what not to do. I think those are really valuable when you're in this market, but there's other parallels that can be learned globally.
Yeah, I would say that Canada is really trying hard to be progressive in its approach to pension savings and workplace sponsored savings plans. You see certain provisions like auto enrollment, and I alluded earlier to a number like 90% engagement, which would be extraordinarily high. Things like auto enrollment, where within 30 days, unless a member actively opts out of a plan, they're automatically enrolled, and the employer would make a minimum 1% contribution into that plan for that employee, are things that have been legislatively enabled and turn on. Auto escalation would be a similar sort of feature where your contribution amounts will automatically escalate and increase over time as, usually you're earning a bit more, you're getting closer to retirement. You want to make sure that you're hitting those goals to achieve your retirement budget. So these types of things are great, and they're happening in Canada. I mentioned as well the ability to assign a beneficiary with a digital signature. That's a relatively recent thing that happened in Canada in the last couple of years.
It sounds so simple when you say it out loud. So I never want to downplay something that was like, no, that was a big deal before, and now we've made it easy. But most of us sitting here going, that should have always been easy, but it doesn't mean it was.
Yeah, no, for sure. And so, and you've got some unique things in that you've got provincial regulatory bodies, you've got the CRA, you've got sort of CAPSA guidelines that govern the management of these types of plans. But that's the Canadian space. I talked about sort of where we're at in terms of engagement. But if you look at another similar country, another Commonwealth country in Australia, you've got significantly higher assets. You've got assets in the trillions, and that's all because of these superannuation plans. So the government mandates that employers have to offer their employees some type of workplace savings solution. So you have these supers,
mandatory
superannuation plans, and so you've got a similar population base, but you've got many times larger asset base because of how this is structured. So that's an interesting case study. Would we see legislation in Canada that's similar? Potentially. VRSP in Quebec was a similar sort of objective in the plan type that they were trying to achieve. Didn't quite get there. Another interesting country to look at is the US, where you wouldn't expect that type of government sort of pressure on employers, right? Like it's free market economy, everyone do what they want, but there are significant regulatory tailwinds in the US. They're related to something called the Secure Act, and that stands for setting every community up for retirement enhancement. And effectively,
I love a good acronym. That's a rich one for sure.
It's a long one.
That's got some weight. That's got some weight to it.
But effectively, when that government looks at sort of number 1 and 2 budget items, they've got defense spending, they got social security. How do you reduce those liabilities or potentially push those social security liabilities down? Well, you create legislation that incentivizes employers to spin these types of plans up. So you offer tax breaks and credits for employers that offer these types of plans. And that ultimately will benefit the ability to manage, a rather significant social security budget. So that's been very effective. In addition to that, they've removed a bunch of barriers and legislation around multi-employer and pooled employer plans. So, there used to be requirements around region or industry for these types of pool plans. Removing those barriers allows for more what they call PEPs and MAPs, pooled employer plans and multi-employer plans. So making those easier so that companies can join PEPs or MAPs at scale. We offer a multi-employer defined contribution pension plan in Canada. And it's a real solution for small private companies to offer their employees a true pension plan. We make it very easy because we're not just the administrator of that plan, we're also the sponsor of that plan. So you're seeing a similar sort of trend with these PEPs and MEPs in the US related to the Secure Act. And I think there's Secure Act 2.0 that was recently passed. So yeah, it's actually surprising how quickly that market is growing in the US.
It's so interesting, the long tail of what you're talking about. I'm certainly not a finance expert or an economist, but I think about Australia and I think about how many years has that been in play where it was mandated? Do you know off the top of your head?
Off the top of my head, I'm not sure, but
but let's say it was 10 years. Let's say it was 15 years. And let's say it was 7 years ago, because typically an average investment with a safe rate of return after fees will double in 7 years. So let's say it's 7 years ago and everyone put in $1 and now it's $2. And yes, that was forced, and a lot of employers bristle. I don't want to be forced, and don't mandate me to do this, and don't regulate me to do that. But if you look at the long tail of the benefit to the overall economy of more money in play, more assets being invested, and hopefully those investments are being put into the market and funding other companies to start up and grow, and you got a population that's feeling more comfortable with retirement. And I know we've got RRSPs and TFSAs. We have vehicles that are designed to kind of defer to add long-term value to the economy. But that's a pretty interesting thought exercise that wouldn't be too hard with ChatGPT and a little graph to show where that line difference is like significantly between where Canada might be 7 years or 10 or 14 years from now, where Australia might be. Just a little thought exercise as I was listening to you talk.
Yeah, no, it's a very interesting case study, no question about it. They've been those types of plans have been very successful in preparing working Australians for retirement. There's definite concerns that we see in North America on the ability of public pension schemes to support an aging population. And so, these are tools where, with employer contributions, and those contributions are all part of an overall compensation planning exercise for these companies to make sure that people are prepared, that they can retire on their own terms.
Well, there's a certain degree of benevolence, and if a company is truly benevolent in that way, in terms of how they make the world better, because I don't want to say how companies are the answer to the future, because there's lots of companies that do shady things. There's lots of bad actors and good actors. But in the context of what you're talking about, it's the good actors that are leaving the world kind of better than they found it long after that employee might not be part of their team anymore. Mm-hmm.
Well, it's an interesting journey that Link took. The original concept of Link was to put all types of employer sponsor comp on one single platform, one dashboard. And we actually got there. We had an HSA, we were doing adjudication and administration of health claims. We had a small marketplace where you could buy an individual health plan for your family with your HSA dollars. We, parallel to that, had an employee share purchase plan. So similar to what you mentioned earlier with the energy companies, that was very popular. And then at the core of it, we had a full suite of workplace savings products, group TFSA, deferred profit share plans, group RSPs, DC pension. But that was very difficult to sustain for a startup. So we had parked the health benefit and the equity benefit and really focused on the savings piece. We saw an opportunity here. We saw a significant concentration in the insurance space in terms of the assets that were held by Canadians. And we saw an opportunity to really provide a technology infrastructure layer that would support this type of business. When we also looked inward, we looked and we saw that the technology platform was really quite powerful, and that the distribution model, we originally sold directly. So we were selling against benefits advisors into companies, which is a pretty significant independent sales force for a lot of the insurance companies. And it was a challenging go. But when we looked inward, we saw the technology and the value of that. We recognized that, okay, let's look at a different distribution model. Let's white license our technology platform to partners that have these types of relationships, where it makes sense to, and they might already be doing this. Like, if you look at banks and some of the credit unions, they have group savings solutions, but they're typically either kind of homegrown or outsourced with other providers that have been around for decades. That might not be the best experience. So that's where we saw the opportunity and kind of made a couple different pivots over the history of the company.
So 2016, 9 years, 10 months you've been there. How long has the company been in existence?
that exact amount of time.
Okay. How long ago was the pivot you just talked about?
Oh dear. I mean, we, in one of our banking relationships, that was a conversation that started, 2018, right? So we started to understand that, this was something that could be very interesting. And that as that progressed and we had more conversations with potential licensees that were looking for opportunities to enter this space, we continued to kind of evaluate this and then really just put more effort and focus on establishing more of these types of partner relationships.
As a CEO, leading that, obviously you have investors, you probably have advisors, board members. It sounded like it was a bit of a slow burn. There wasn't all right, Friday we're closing down this and Monday we're that. It doesn't sound like that's how it went. That's the Hollywood version. It's not what I'm hearing you say.
No, we didn't flip the switch one night and completely
We're blowing it all. We're blowing it all up.
Yeah, no, it was, and of course, with the stakeholders that include shareholders and of course our board members, it was consultative with them and getting sort of their direction on what they thought and taking that into account and consideration as we kind of made these pivots over time. But no, they were not flip of the switch type things that happened over a week.
That's not what I'm hearing. No. That's not what I'm hearing. No. But how big is your team? Just give me some. Not that team size matters, but it does because it's humans that you're now working with.
Yeah, so we're floating around 30 full-time employees. We are a remote first company, so we have employees from
remote,
coast to coast.
Remote.
Yeah, it's great. There's really.
I'm a fan, obviously.
Yeah, I think the panacea would be to be fully remote, but have the ability to get your team together in its entirety frequently.
But the geographical spread of Canada makes that very challenging. I wrestle with that same one myself.
Yeah. Flying.
I'd love to throw a party and have everybody come, but I also took the time to talk to my employees. They're like, I've got young children, I've got a dog. Like, thank you, but that's actually really hard for me. And being really respectful that a CEO might want to get you all in one room, but it maybe isn't the best if you really are able, because at small numbers, you can really personalize your culture. You can call up Emily in Ottawa and ask her what matters to her. And I think that's a strength of that almost is required as a leader with a smaller remote team.
Yeah. No, it's working very, very well. There's a ton of transparency within our team, and especially within individual relationships within our team. We are very much a transparent company. We're straightforward. We don't hold back, but we treat everyone with respect, and we carry that through with our partnerships as well. Very transparent and open in those communications, in those relationships. But yeah, so far it works well. I wish we could have our team, like I said, together more. We take advantage of every opportunity. If I'm, traveling and I'm in Toronto and we've got folks that are in the GTA,
stop in for a visit. I do the same thing.
Exactly. Yeah. But yeah, we've got folks on the island, Vancouver Island, Northern BC, Northern Alberta, I don't think we have anyone. We do not have anyone in Saskatchewan, Manitoba, but Quebec and Montreal, and around Toronto, Barrie, Milton, Binbrook.
Very, very similar profile. I appreciate it. The freedom of attracting the right people, and it doesn't matter what their address is also can be a superpower when you're hiring.
For sure. Like that's enabled us to have access to some of the best people in the business. And that's a awesome. Massive advantage.
9 years and 10 months. If we were just for fun, going to stack rank some of the challenges. Is it people, getting the right people? Has it been getting the right customers, access to funds, technology? Out of 9 years and 10 months, you've been through it all in one way, shape, or form. COVID show up in the middle there, but if you were already remote first, that maybe helped. But as a CEO, as a leader, as a founder, what are some of those challenges? Like, were the ones that really stand out, or have they all just had their season?
Yeah, it's funny you mentioned that. I was communicating with one of our banking partners yesterday and talking about aging in dog years.
Nice. I like that.
It is, in sort of the time that I've been here and the time before we actually started this company and we're finding ways to build this, I've seen it all. I've been through pretty much every experience I think you could go through as a CEO. And it's been a fantastic journey. Maybe I change a few things, but
hindsight is notoriously 20/20, as they say.
Yes. But no, I mean, I've seen some fantastic ups and seen some really challenging times as well. Have had some relationships that haven't worked out, and
those are always the worst. I don't like those. That never gets easier.
They are the worst. Those are some of the most challenging bits that you deal with leading a company is how you deal with people, and we, like I said, we always try to be respectful and transparent in everything we do, but there's all sorts of challenges that are related to that we.
I'll say it. My words, not yours. Sometimes shit happens.
Right? Yeah. Thank you. Thank you very much.
My words, not yours. I thought I just dropped that one in there.
But every one of these experiences though is absolutely a learning experience. It's a maturing experience. Experiential. You're learning every step of the way when you're dealing with these challenges, and you're looking for the next high, right? Like, what's the next win that we're going to?
What's the next thing? What's the next thing that we can get excited about? Absolutely.
We're going to grind so that we can hit this next milestone, and we can celebrate, that milestone with the team and with our families. And that's one thing as well. Like, I was at a closing event for a Calgary company that was acquired relatively recently, and the VC that had invested in them put the whole thing together. It was really a fantastic event. It was a great thing to see from the VC.
Do you want to share who that is? Because I love, this is all about a sharing platform about what's going on, especially in Canada. Yeah. So please do some name dropping.
Sure. So there was the On Topical exit party, and Rhino Ventures was a significant backer of theirs in their journey, and just a great story. But one of the things that came up in the founder and the original CEO, one of the more heartfelt parts of the evening and speeches was just how grateful he was to his spouse, his wife, and putting up with, the journey and the challenges. And I think anyone who's an entrepreneur understands that intimately. This is a super challenging thing on not just the work life, which is the majority of your day, but also managing the relationships with your family and with your spouses. It is really significant. And so the role that the spouse plays in supporting an entrepreneur can't be understated. It's so critically important. And, I'm very lucky. And, at the On Topical event, their founder also expressed the same gratitude to that support and helping them through their journey.
Entrepreneurism will conspire to eat up every moment of time that you have available for it. And it will take a little bit. And that's often what it does take. Like you said, you hustle, grind, grit, all those words.
Yeah.
Just to clarify a little bit, because I always appreciate it. I always put on my filter of who might be listening. So if I'm a manager or an owner or a founder of a smaller company, is this accessible to me? Is this often looked at like, if I was bigger, I would offer this? But I heard you make a couple comments around shared and pooled and creating accessibility for potentially smaller businesses that still want to show that differentiation and value to their employees.
Oh, that's a great question. You will see there's an affordability sort of discussion that needs to happen. That needs to be set against a compensation planning strategy. So there's a couple different ways.
The total comp.
The total comp. Right? Yeah, there's a couple different ways to look at this. But the arc you typically see is, we talk about entrepreneurship. A company starts up, there's a few employees, they need some sort of payroll solution, and then they need some sort of benefit solution. And it might be something simple like an HSA. And they'll progress and they'll mature. And then as they need to attract more talent, they'll look to broaden their offerings. So you'll see option plans, you'll see probably an enhanced health offering, and then you'll typically see some sort of savings solution.
Oh, I appreciate that you're going up the graph. You're taking a step. You were there for a while, then you move to the next step.
Yeah, and that's traditionally what you've seen. I think there's an opportunity to sort of introduce the workplace savings solution earlier, like. To scale down at that level in these types of plans has been traditionally very challenging. The incumbents, have small biz, SMB type offerings. They're pretty basic, but it's really difficult to serve that space at scale. And so that's something that we understand intimately. But you keyed into something quite important there, Tyler, is these pooled type plans allow these smaller employees to participate where they might not normally. And especially in a product like a defined contribution pension plan and what we call our LMEP, the Link Multi-Employer Pension Plan, it is an opportunity to offer true DC pension for a company that might be as small as 2 employees. Right.
Wow.
And so joining that plan as what we call a participating employer kind of lowers the barrier of entry for these types of plans and makes this available to companies that might not normally have access to these types of plans. But it is, in a straight ahead group RSP, it's challenging to, serve companies with 5-10 employees. But what you need to be really focused on as a provider and a record keeper is, one is the ability to scale up and serve these significantly large plans where you might have 30,000 employees. And if you can do the same thing in the opposite direction and be able to serve these smaller plans at scale, that's where the opportunity exists to open up the net new opportunity where, half of Canadians don't have access to a workplace savings solution. And, we're very cognizant of that and obviously see an opportunity around that.
You went right where I was, that 50%, and I don't have the stats in front of me, but we all see the big businesses and the big logos and the big nameplates and the 5,000 employees. But when you see the stats in Canada, especially even in Western Canada, the amount of small businesses, like companies under 10, that employ a significant amount of the population and drive a significant amount of GDP revenue, but just never get they never get the stars and lights because they're smaller, but yet there's so many of them. If we're going to build that 50% gap, you've got to be able to play in that space, or it won't, I don't think it'll work.
Yeah, I much like yourself, can spend a fair bit of time poking around StatsCan and looking at these types of numbers, but it is shocking the quantum of small companies, small businesses in Canada. It is a significant, mover of our economy, and it is unique.
And there always feels like significant headwinds when you're a small business.
Yeah, no question. There's challenging times, but there is a Canadian resilience that exists that's out there. And in particular, I know this is sort of an Alberta focused podcast, but as a native Albertan, I love this space, this place. Albertans are very entrepreneurial, typically well educated and extremely hardworking. So it's a great place as a builder and an entrepreneur to live and exist.
I moved here and stayed. I got a little whiff of it. I'm like, I like what this is all about. These are my people. I'm going to hang out here. And that was 25 years ago. And here I am today. Assuming this is available across Canada. Like this is. We're talking about, I love to talk to businesses based here to really show, but again, nothing I love better than awesome Alberta founded companies that are exporting their awesomeness around the country, around the world, or certainly around North America. And so is this Canadian? Is there an imaginary line for you at the border, or is this unrestricted from that perspective?
No, this is very much unrestricted. And, the opportunities and the regulatory tailwinds that I mentioned previously in the US are obviously very attractive. To what we are currently doing, and our multi-employer pension plans or solutions that we offer, the record keeping and the the business itself is pretty straightforward. You're making deductions from payroll, you're remitting those contributions, you go into market and you're trading those securities. You're showing members their dashboards of their holdings, you're providing the appropriate reporting. That's no different anywhere in these types of plans. It's just a matter of regulatory requirements, reporting requirements, taxation, treatment of these types of plans. But these are kind of things that you plug into. Well, I make it sound really simple. You just plug that into a rule.
Your team that are listening all just rolled their eyes right there when you do that. You're like, oh wow, there's Brian just making broad sweeping statements.
The immediate pause.
I immediately think of provincial regulations. I think of state-based tax regulations. There's nothing easy about it, but it's valuable and it's worth it. And that's the journey of building a business, is right. Picking and choosing the markets you go into.
Exactly. And, so our focus today is to establish a foothold domestically and use that as, a catalyst to go south of the border. We have a very exciting partnership with one of Canada's top banks and BMO Bank of Montreal. They're a minority equity investor in Link as well as a strategic partner. So in the model that I was describing earlier, we've built them a white label group RSP that they are able to put BMO investment products, low cost index tracking ETFs into portfolios, and they're selling that to their commercial banking clients. So that's an exciting opportunity. And of course, they have a significant presence in the US. So, we're always thinking of ways where is that a partner that will enable Link to enter the US marketplace? But there are opportunities outside of that partnership that we're also pursuing that'll allow us to enter that market. But, we're very much focused, at least today, on executing and continuing to build our book of business in Canada.
Yeah, because I'm really hearing the picks and shovels approach with that of like, yes, absolutely. We can come right in between and support you on your exploration and your journey by providing you the tools you need to do your job, which obviously with a player like that, the reach, the marketing engine, the power, the network that they have, those are those force multipliers, right?
They're a fantastic partner. They're one of the banks that are very progressive in their digital approach. The one bank strategy that they ascribe to is really, to have a complete offering, through individual personal solutions to corporate solutions. And, we sit at the middle of that and link those things together.
I love it. So roadmap for you guys, obviously 9 years and exactly 10 months, according to LinkedIn. Is this eventually an exit? I'm getting into the personal files now of like, oh, where we're going. Is that, I'm assuming opportunities like that will show up, or is it, no, we're leaning in, we're building this thing, but we'll also, same time, we got to see what the future holds.
I think as a leader and a CEO, you always need to be thinking ahead about what those opportunities looks like, and not just thinking about them, but also laying the groundwork for those types of things. But yeah, I think the team is very much focused on execution right now. So we have some very exciting partnerships. We just landed a new partnership in the last month that's bringing a significant block of business to our platform. They're very excited about what we do. We're very excited about what they do. We think it's going to be fantastic. We're looking to license to other partners. So that's very much, the focus of the team today. But what does the future have in store? Yeah, there's been a number of fantastic Calgary tech stories. Solium ShareWorks was acquired as a unicorn by Morgan Stanley. If Link is employer-sponsored savings plans, Solium was employer-sponsored ownership plans, so stock options and share purchases. Morgan Stanley saw a fantastic opportunity to convert corporate plan members, these option holders, into wealth management clients, and they were very successful in doing that. So that's a unicorn out of Calgary. Another company that's in the employer-sponsored space as well was Benevity, acquired by private equity. Again, Link employer-sponsored savings, Benevity employer-sponsored giving plans. We have a number of fantastic people from the Benevity team that have joined the Link team. They're really killers, as we like to say, and are contributing immensely to what we do. And so that was an exit opportunity for them, is PA acquisition.
And it's also doing that thing that I think I've been doing this podcast for 5 years. Like, we need more exits, so those smart people that learn some lessons now get to come back into the ecosystem and go to other startups and build it up. And I'm like, I've got Benevity, I wrote down Zazu, and I wrote down Solium, I wrote down Neo, I wrote down Helsum, I wrote down Link. there's a little layer here that maybe doesn't always get the attention of like, hey, 1, 2, 3, 4, like there's something going on here in Alberta, in Calgary.
No, there's absolutely some amazing founders and entrepreneurs. The Zazian guys are really fantastic. Cement would be another one that I'd throw into that,
that's good.
mix.
Yeah, totally.
Great people there as well. So yeah, you have this community that's really starting to build. And then that in turn, I hear what you're saying 100% with the exits. And if we go rewind 20 minutes or so, we were talking about the energy business in Calgary, and that was just the glory days of the city. You had 100%. Management teams that would acquire an asset, turn that around, it would get acquired, that management team would split up and they'd go do it again and again.
And there'd be lineups to give them money because they had track records, they had proven expertise. And people, it's a risky industry that people got really comfortable with.
Yeah. And so in my previous life, in technology, my entire career, but providing technology services to companies, Solium was one of them in the earliest of early days. They were a client, and these.
Brian, are you an OG, Brian? Is that what you're telling me?
Well, I'm the O part, if you mean old.
Hey, I'm not getting any younger either, so I'm going to be careful throwing that term around. Yeah. No, but sometimes I've chatted with people, and they get like, "Hey, there's been a lot going on here for a lot of years. I know the last 5 to 8 years, there's been a lot of buzz around the tech scene in Calgary, but some of us have been slugging this thing out for a while, people." And I do appreciate bringing light to it. That's part of the show.
Yeah. So just having that outside in perspective on these different types of companies and how they succeed, and how they're looking to leverage technology to enhance their business. We're at a really interesting inflection point right now with leveraging AI within businesses. Every CEO that's out there
that is the conversation of the day, twice a day.
Is trying to figure out how do we get ahead? How do we not get disrupted? Looking in ahead and looking in the rearview mirror at the same time. But yeah, there's massive opportunity to really grow what you're doing by leveraging solutions that are out there. So it's an exciting time. But yeah, Calgary's a great spot. There's been some really interesting exits that have happened. I think right now, we're contemplating what the future looks like, but we're very much focused on execution right now and growing what we're doing right now with the partners and new partners.
I appreciate it. That's awesome. No, it's fun when you start going down the list, and the list keeps getting longer as you go, oh yeah, I know. And I know Darcy over there, and I know Nick over there. It's just, and it's such a big, small town. It's not that hard to have bumped into many of these individuals that you're talking about.
Totally. Yeah,
I do. It's the greatest, our greatest superpower, biggest small town ever. And I heard someone say it, but I agree. You're only ever one coffee away from meeting someone that can change the trajectory of what you're working on. That's pretty cool. That is pretty cool. I choose to embrace that full on every time.
And that's an Alberta thing. That's a Calgary thing. I love it. It's totally true.
That people are like, oh, that happens everywhere. I'm like, I'm going to push back. I think it happens a little extra special here. So if I'm an employer, which I am, and I'm listening to this, go to your website, reach out to you guys, have a conversation. I'm sure you've got some customer success people that will say, hey, where are you at? What do you need? And can we help you?
Yeah, absolutely. And if you are in the financial services space, you are a wealth manager, you're an asset manager, and you've always been challenged by, how do I offer, my clients these?
How do I make this easier?
We absolutely love to have that conversation and show you how that is completely possible. So yeah, absolutely.
And it's link-plans.com.
That's right.
Okay, fantastic. So check out your website. I was cruising around this morning. How about you, Brian? Brian, you're a super social guy. Do people reach out to you on LinkedIn? If someone wanted to have a chat because they were curious about, who knows, everything from investing to working with you guys or partnering, are you available? Do you put yourself out there?
I am highly available. Yeah, I love it. I do.
I had a sense you might be.
I love to have conversations now. Obviously, extremely busy, and I ensure that if someone's reaching out on LinkedIn, I delegate enough time during the week to kind of get caught up on those sorts of things. But yeah, I am very available. So if anyone listening wants to learn more,
Brian McLennan with a little C and a big C, and you're pretty easy to find on LinkedIn. And I do also love the Calgary LinkedIn community. It's pretty tight knit. The right people are connected to the right people. Mm-hmm. It's the one social media platform that probably adds the most value. And I don't go, did I just waste 10 minutes of my life? I don't necessarily feel that on LinkedIn. It's a very good tool.
I agree. I'm with you.
Brian, thanks for coming on. Thanks for your candor. Thanks for the work you do. I love what you're putting together and how, succinctly you were able to walk us through, and congratulations and all the best on the journey.
Well, hey, Tyler, thanks very much for having me. You're doing great stuff here. The conversation couldn't be easier with you. So I appreciate, how comfortable you make your guests feel. And it's been fantastic. I appreciate it.
Amazing. Thanks, my friend. Cheers.
All right.